Today, I wanted to kind of get into volatility in markets, what brings it on, what we can do about it, how we can prepare ourselves for it. Because the precious metals markets, although it has had spikes in the past, typically has a pretty long track record of stabilization and what you could almost make out as rational market movements. But now, with the attention of the world and global economic crisis everywhere, you will see a lot more volatility and volume pumped into the market. Today's date is November 8th. We've got gold closing the week at $3,999.60, silver $48.23, platinum $1,543 there. We got a little bit of all that represented here on the screen. But yeah, I was thinking about volatility. I don't know about you, but many of you are probably like me, and you've had decades of experience in this world, watching markets, putting your money into markets, seeing your money grow and seeing your money drop as the fluctuations happen. And I'm old enough that I remember when this world had no internet connection, when we had people skeptical of using online banking when it first started. Not putting their trust in the banking system, right? Not having credit cards for everything, not having cellular phones and smartphones. And the world has changed, and it's kind of exponentially changing. And you've really got to start to get to the point where you keep up and acknowledge those changes. And one of the changes that has absolutely happened in the last 30 years is the accessibility of markets to your average layman. Now, that can be a good thing for those of us making sort of the opportunity to expand our wealth and to put our money to work in markets that we previously had not available, because there was a good old boys club, right? If you take the New York Stock Exchange, right? The New York Stock Exchange was a very exclusive club of brokers. In fact, I've been on the floor of the stock exchange. I've also been in the rooms upstairs that look like a good old boy hunting lodge. I love it. Leather chairs and, hardwood furniture and hardwood, bookshelves and desks. And it's absolutely stunning and beautiful up there. But it reminds you of sort of like a country club, a golf country club or a yacht club, or you name it, you have it, right? It was an exclusive club for refined gentlemen at one point. And to make deals and trades, you had to call in and get a brokerage, get a broker, have enough money able to actually invest and do all this and all that. And it was a very, very slow process where they put in an order, right? And they had the margin, they had the ability to trade on the margin because of the time it took for transactions to happen. Margins were much larger back then. It was very easy to put in a bid and then wait for your order to be done, and then the broker would just sort of make a couple bucks here or there on all the different transactions. So what happened? Well, what you started to see was online brokerages come out. And I'll make this story as quick as I possibly can so we can get into actual volatility. I apologize. I just got a little bit a little bit nostalgic here thinking about things. And we go into these online brokers, which again, they were not necessarily for everybody. You still had to have minimum amounts to purchase. You still had to pay. I mean, I remember when I kind of first got into it, I think I was paying like $20 a trade. And I want you to think about that. And you had to trade in full shares. So you're paying $20 to get in. You're paying $20 to get out. You're paying in full shares. It just was a situation where, let's just be honest, we live in a society where most people don't even have a $1,000 savings account. How are people going to be able to put money into a brokerage account and deal with all of that? So there were limitations, and most of them were monetarily at this point. Then comes the advent of brokerages such as Robinhood and other different, ways to get into commodities trading. If you want to do some oil futures or some orange futures or gold and silver futures, right? Some platinum. I don't know why I'm not getting a focus here. Apologize. And not only did we start to see free entry into these accounts where you didn't have to put any real money down, They also introduced fractional shares, so people didn't have to, purchase a full share. They could purchase, $5 instead of, having to pay $550 a share, right? So that allowed more access, which again, I'm not arguing whether these are good or bad things. They just absolutely have an impact on how the velocity, the rate of change, and the volume of change that happens, which is how I would define volatility. So now we live in the world where every single person can have access to a brokerage account. They could trade commodities. They could, I don't know why it's getting my camera there. They can trade commodities. They can get in and out as quickly as they want with no real penalties for pulling out early. It's a different world. And because you have millions upon millions and upon millions of people able to enter these markets, it does allow people to have a little bit more opportunity for success, but it does create a situation where you could argue dumb money can easily flow into markets that didn't typically exist. Now, so I'm looking, like, if I just look at something as simple as the 6-month chart of gold and silver, even though it has come up significantly in the last 18 months to 24 months, there was an average steady growth, right? A couple of percent here up, maybe a percent or two down, right? That's not that big of a deal. $3 up, 30 cents up, 60 cents up when silver was $30, right? Not that big of a deal. Not going to be something that we talk about, because a lot of people get hung up on dollar values and they don't really pay attention to percentages. And I think percentages is where you really find the differences in what's going on in the world. Nowadays, people will look at gold, right? Gold's up at, just under $4,000 an ounce. And I see the words crash on a lot of videos and such when gold loses 40 bucks. Guys, that is 1%. Yes, that number seems high when gold was maybe $1,000 an ounce, and $40 is like, wow, we're really starting to move, right? But there's a big difference between 4% and 1% moves. Okay. Now, when you have these volatility coming into these markets, it causes massive swings like we have witnessed. That's how you get those 10% days and those 8% days up and down. It's not because of, just standard, oh, wow, one country has decided to, make one threat to another country, and all of a sudden, there's this massive spike. What's going on now is when something becomes more and more valuable, more and more good and bad and innocent actors decide to jump into something. I see this often in all sorts of markets: real estate, stocks and bonds, automobiles, collectibles, trading cards, antiques. It's the same story over and over and over again. And now in 2025, gold and silver are going to get their opportunity to play and dance in this market. What I mean by this is we just discussed and laid out the foundation of why any and everything can get into these markets and start trading futures and start trading options and driving things up and down at their own will. In addition to that, being able to short things, right? Putting in puts and betting against the system allows you to put negative pressure on those, ultimately, the markets that are being established to determine these prices. And what's going to happen is people are going to deploy their capital into this system, whether they're trading ETFs or whether they're trading the commodities directly on the futures exchanges. And it's going to put a lot of pressure up and down. Again, I'm not trying to make the argument for what is good or bad here. You can let me know in the comments how you feel about all this. But this is what's happening. And you compound that with a lot of these people have a lot of wealth. Stuff that would make all of us look like we are peasants on the farm raking wheat or something. These guys and these funds can drive markets in any direction they want at any time. Now, they understand that in these regulated markets, you probably don't want to rock the boat too much, unless, of course, the people regulating you are in the cut. But if you can rock it a little bit, you can rock it and control it a little bit, and you can make money on the up and on the down and in the in-between, depending on all the different strategies you impose. So what you do is they end up building these systems, right? They end up taking these systems and using it for their own gain. And guess who gets left in the wake of these giant barges rushing in and out of these metals? Well, it's me, it's you, it's all of us who are just trying to put what we can into them and preserve our wealth. I hate to tell you this, but they are not concerned about our opinion on their dealings. They are here to make the maximum amount of wealth that they can for their shareholders and their bank accounts, and they will trade as often as they need to, constantly. So as long as these markets are open, they are trading. They're also deploying systems that will do algorithmic trading. Got AI trading now. And that's why also with cryptocurrencies are so volatile, is because there are things that are trading on those 24 hours a day, 365 days a year. There's no requirements for them to stop. So, and they don't have other, day trading limitations for options and having minimum account balances, et cetera, et cetera. So this is where we're at. We have now gotten the attention, right? When you start seeing news articles and everything in their mom and Uber drivers and millennials and 20-year-olds in college talking about precious metals and getting into gold and getting into silver, while I think it's a fantastic thing, I am all for it and I encourage it highly, that people get smart with their money and don't just consume it and don't drink it away and eat it away and waste it away on trips all the time. They do put some aside. The reality, though, is that it will increase the amount of volume daily, hourly, by minute on every one of these markets. And that increased volume is going to have an impact. Okay, it is going to create volatility. There is going to be a new norm for a while until things peter out a little bit and calm down. There will be a new norm where we will see higher volume and higher volatility constantly. And you need to just ride the wave, relax, stick to your plan and your guns, right? If you want to pick up a 10th of gold a month, that's what you can afford. Stick to your guns, right? Price is going to go up, price is going to go down. Don't get overly emotional. Don't say, oh my, it went up another $30 today, or it went up $80 today. I can't get in. I got to wait for that pullback. You can do that. And there probably will be a pullback about the same amount, but don't get too emotional. Don't see it going up and go bah like a lot of sheep and go, oh my, it's going to 10K tomorrow. I need to go spend everything I can today because I see the price going up. Oh no, the price went down 3%. I need to sell everything and try to preserve my wealth because it's all falling, right? This is, you're going to experience things. You're also going to start to experience bad actors enter this space. The more money there is to be mad, and the more attention and buyers there are on something, you're going to see bad actors. I would highly caution you to make sure you are purchasing from reputable sources and the ability to get, support if something goes wrong, or to have a relationship with the people that you're buying with, because you're going to start to see a lot of people enter the selling space because they know there's going to be a lot of suckers excited to buy and excited to put their money who don't have knowledge and experience dealing in these markets. So anyway, I'm not trying to be doom and gloom. I just wanted to point out that there is volatility. It exists. We need to be aware of it. We need to kind of change our thinking to go from this isn't some stabilized market that's going to slowly creep up, 5-10% over each month. Now, there are going to be swings up and down. Ride the wave, relax, take a breath, sip your coffee, whatever you got to do, go for a walk. Things are going to be okay. And you just kind of wait the turbulence out. Eventually, the barge will drift on to the next island and try to take over that island. And you will be in their rear view mirror, so to speak. And at that point, we can all kind of relax and go back into our normal day. But for now, enjoy the ride. Enjoy the run up on your metals. I genuinely hope that it continues to go up. I completely agree with all the economic indicators saying that this economy is in a pretty rough spot. And I believe, and this is another topic for another day, I believe the United States' only answer for what's about to come is going to be to issue a lot more currency into the markets to bail people out again, and to bail institutions out. And I think it's going to start. We've already started seeing little small ripples of this as well. But again, topic for another day. I'm not doom and gloomer. I just try to face reality and think of a plan that I can do to be ready when what I think is going to happen happens. So thanks for tuning in, hanging out. Oh, wait, I forgot. We got a little treat. What we got? As you know, this little mimic box has the items that are new pickups from either local coin shops or online dealers. And we are looking for a name for this guy. I got a little poll, or not a poll, but a little recommendation thing going on in the posts tab of YouTube. So go ahead and check it out. Let me see if I can get a good look on this thing. My camera is acting up really bad today. I'm not sure what I've done, but I'm trying to get a good focus for you. There we go, getting a little bit for it. But we've got a 20 francs, I believe, is what it's called. And there's a French 20 francs. So I guess, is that more authentic than anything else, like a Belgium or anything? I don't know. But this is, I will say, this is kind of one of the first real, I guess you could say, real gold coins. I talked about it in a previous video, how I am really getting into historic coinage, just to feel its history, its weight, literally and figuratively, and its importance and impact and potential impact that it could have had on this world that we live in. Another video I'm going to do is about tangible things in a digital world. So I hope that you enjoy these conversations. Please leave comments, agree, disagree, your thoughts on things. I could have gone a lot deeper, but I felt like I started to ramble a little bit there. But anyway, thank you so much for joining me here. I appreciate you guys. And also, we are taking on the 100 Pieces of Gold Challenge. So I will feed my spot here all the rest of this gold, and we will get started. And we will be starting at, it looks like 8 pieces of gold here. So thank you so much. Appreciate you. And I will see you on the next one. Bye-bye.